Hey guys, Mike here. So, oh boy, what a day in the market. Green on all three indexes. I'll go into basically what caused this today, and also the Qs, the QQQ that is about to do something it has never done before. Remember, it's a year first, right? That's what we keep talking about, okay? At least the last 365 days have been that. But there was some data that dropped today. I think it caught everybody off guard. I'm pretty sure it did. It was just kind of stunning. And it came from the real estate market, all right? And I mean, the reason why it's so stunning is because, why? Houses are really expensive, and mortgage rates are higher than they've been in, like, what, almost 17, 18 years now, I believe it is. And so when you look at this, it was like, oh my goodness, existing home sales, as you can see, popped up and everything. And so year over year, you can see this increase coming. But more importantly, was this right here. Look at how many homes sold in May. And they're like, whoa, way above forecast. And you saw since February, they've been trickling up. But then you see this massive jump up on new home sales. And so, of course, now you got existing home sales popping up, new home sales going up, which, of course, what's that mean for inventory? Way down. But the fact that many people, that means more people than projected bought at these rates, at these prices, right? So it was like stunning. And of course, I mean, it's considered bullish, right? It's like, hey, here we go, right? Keep it going, keep it going. And so, that surprised me. Let me know in the comments if it surprised you. Let me know if you're one of those people that are buying at these prices and at these rates and stuff. But, congratulations on buying a home. I'm personally would not want to be paying that monthly mortgage because I've covered that before, how expensive it is. But, I guess it's better than rent. So let's just say that. Now, why are people able to do this? Well, this is some data I found today, and I saw this guy doing an interview about this. And, basically he goes into why, and I asked you guys this question last week, for those who actually watched the video and participated, I appreciate it, which was, can the Fed slow down this economy, like slow down all the job hiring and stuff? And this guy brought up a great point. He said, look at where the jobs are coming from, though. It's a place where the Fed can affect it. That's the problem. Right? And if you look on this graph right here, I'm going to show you, you can see right here the leading sector, and do me a favor and add 3 zeros to those numbers you see at the top, right? So for May, education, healthcare services, right? 97,000. Then you got governments in number 3, and these are local governments, 56,000, right? And there's hospitality. You think hospitality would be number 1 as much as we hear about it, but it's all the way at number 4. And then, of course, you got construction. You see manufacturing finally went negative. But the problem is, people are going to get sick, they're going to get sick, right? Education's education, and then, of course, government is government. So the rates aren't going to affect those. Like, you can't slow that down, okay? And our government's one of the biggest employers out there. And even in, he made a great point in 2008, during the recession, it was education and healthcare services actually gaining ground at like a record pace during those time frames. So just keep that in mind. So sure, he can affect hospitality, business services, I guess, construction, but not those 2 of the top 3. And so you got to keep that in mind. And then the other thing that doesn't help, look at this, U.S. discretionary spending. This is the government. 1.7 trillion already. They're going to spend more this year than they did in 2022. Look how much more than in 2019. And remember, they've added like 650 billion onto the debt just this month, after they just signed some bill about bringing down inflation and stuff. And they're spending like there's just no bottom to it. I mean, that is just nuts. But then when you look at the consumer, look what's happened to what we're doing when it comes to actual retail sales. Look at retail sales year over year percentage. Look, it is lower. If you take out 2020 when we shut down the world, it is lower than any point on this chart. All right. And I mean, if this chart kept going, I guess it probably put us back 2011, 2012. But I mean, it's just falling off a cliff when it comes to retail sales, because what are we doing? We're spending on travel and experiences, things of that nature. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And this, of course, is why you see airline stocks hitting new 52-week highs today. You see cruise line stocks absolutely going off the charts today. Okay, that's why you're seeing that. So again, when I saw that, that was stunning to me to say, wait a minute, we've already spent on discretionary spending in 6 months, 2023, as much as we did all of 2022, and we were getting out in 2022, and then that much more than 2019 when the world was normal. I mean, that's shocking, But that's what I'm saying. Can they slow this thing down? I just don't know. I mean, if they do, obviously, and they keep rates at higher rates, it's going to take a lot longer, and it's already taking a lot longer than people think. That's the problem. And what else do you see happening? That's why you see consumer confidence coming back today and things like that. And so keep that in mind. Now, what drove the markets to go crazy today? And you can always tell, usually around 10, 30, 11, you'll know, okay, what's going on. But when this came out, and I just sent this out to the members, all about the options, baby. Look at the options. There was no kind of put activity. All expiration options right there, 4.4 billion. And then look at the zero DTE options, around 2.3 billion. So you're talking almost $7 billion. Started just taking off around 10:30 and just skyrocketed from there on in, going into lunch, right? And so just drove this market straight on up, okay? And then, of course, don't think for a second people aren't hedging, right? This is the VIX average daily call option. You can see it's higher than it's been even since 2020. If we draw it over, when we shut down the world, there's more VIX call options going out now than there was then. And the thing is, they're just not buying it like now. They're buying out, right? In like August, September, October, right? And so don't think there's not hedging going on. And of course, going back to all the call option buying, what's it allow the NASDAQ 100 to do? To sit there and it's on track, if we start moving up here, to have its best first half ever. This goes back to the 80s when this QQQs came out. And if I asked you 6 months ago, would you have said, oh yeah, the first 6 months would be the best the NASDAQ 100 had ever seen in this kind of environment we're in? And that just shows you how much money was sent out to people and businesses and things like that. I mean, it's insane to think about, but that's what's happening. And of course, with this bounce, we only got a few days left. Looks like this is going to be the case, okay? And of course, why? I mean, look at the laggers last year or the leaders now, and look at IT, communication services, baby. I mean, that's what's driving this whole thing up. And there's consumer discretionary, by the way, which I don't think anybody would have guessed to have a great year this year, but you can see by the spending. Oh, absolutely, it's having a great year this year. And so just keep that in mind. And, you know, when you look at, like, for example, I'm going to start with IWM, right? Because this is where the breadth comes in, all this good stuff, right? It held up on that 200 moving average, got its bounce. Because if it fell below there, it was toast. There was nothing good happening below the 200. You can see it. It got rejected off the all-time high anchored VWAP, right? And remember, what's the key number? 189. We must close above 189 for the IWM and the breadth and small caps and all that stuff to mean anything. Just keep that in mind. And then we go in the Qs, you can see it's in this channel right here. Again, we rejected perfectly off the top. Now, right in the middle, if you draw a line right inside that channel, you can see multiple rejections and bounces off. So the chance this is where we're bouncing at right here. Good thing is, at least it got close to the 50 moving average. That was nice. Kind of closed that gap just a little bit. And of course, now we're not overbought in the daily, which is always a healthy thing. Again, hopefully the MACD turns back up, because right now it's facing downward. But, you know, we'll see. But again, what we talked about the other day, pullbacks are healthy. There's nothing wrong with it. It's actually the best thing that could happen, right? I mean, it was only at most so far 4%, and now it bounced back 2%. So we'll see if it continues or breaks down through that line. Just keep that trend line in mind, okay? Now, Tesla. Got lucky today. I didn't see a downgrade. Okay, had 4 in a row. Yes, it was one yesterday, and 4 in a row. Now, good bounce back. If it can get above around 248, you can sit here and see that volume gap right there. It can feel that very quickly to get up to 255 again. Then it'll run to resistance around 257. If it can get above that, then you're talking about 265. And then, of course, you can see the higher it goes, the less resistance it has. Now, one thing that helps Tesla out, and I can't wait to see, I believe we get the new numbers Sunday, if I'm not mistaken, on deliveries and things like that. And one thing that has helped it is look at the average car now. And this is the average used car for Tesla. I mean, that is a big decrease, right? I mean, you're talking about from 67,000, almost 68,000 in July of 2022, and a year later it's 45,000-ish. So that's a big drop, you know, and so we'll get to see all these price cuts are people actually buying more Teslas, right? That's what we want to see. And you can see on the daily, what you don't want to do is drop down below 248 again, because then you go into this massive volume gap, which could drop even faster. And that's a problem when you have, you know, these gamma squeezes up, gamma squeezes down. Now, Apple, new all-time high, right? Every single day feels like a new all-time high for the biggest stock out there, okay? And when you look at this thing, again, in this channel, if we add the moving averages, let me see, when's the last time this thing even touched the 50? I think, if I'm not mistaken, well, it ain't touched the 50 in a long time. What is that, January? So almost all year long, yeah, it hadn't touched the 50. which is kind of abnormal for Apple. But, you know, again, way away from its 200 now, all these gaps to fill, but they keep pushing it up because remember, this is in more ETFs than any stock out there by a country mile. It's like a market of its own. The opposite of what's happening is Microsoft. Microsoft, I told members a few days ago, hey man, this needs a bounce because it's sitting right on that volume node right there. And if it drops through, you see that volume gap? Yeah, it can drop fast, right? And then fill the gap right in there. So again, this is a heavily weighted stock, which can weigh on the indexes. So it got a little bounce today. It needs a little more love to keep up and stay out of that. And then if you look, AMD we talked about, almost hit the 50, but a lot of support going on here, right? You got the 50 right here. You got that trend line, which I showed you. Nice little bounce back today in semis, which were getting hit pretty hard. Some of the AI fluff was coming out of it. Again, you got that volume node right there, and what's right above it? Volume gap. Okay, so this can go up pretty quickly. It looks like around the 116 area right there. If it does continue this move up until we hit some more resistance right there, we'll keep that in mind. If we go over to the hourly, and then we add in, you know, you can see right here what I'm talking about. If we can get above this right here, you can feel, and then right there, 113 to around 118. Can feel pretty fast, but can continue to move up. And we've seen how these stocks move, especially semis. I mean, they can move fast up or down, but this is why they move so fast up or down. Okay, and leave these big volume gaps and stuff. And then BABA, you know, Chinese stocks are getting some love now. I really don't know why, to be honest with you. I think it's just a technical bounce because I hadn't seen anything positive coming out of there or anything out of China. But you know, this is another one. Loves the volume gaps, right? Moves up fast. You can see in that area right there between 87 and 89, it can move fast. Just has to get a little more love to push it up, right? And then you can see it even better here when I go here to the hourly. If it continues to go, right there, you'll see a little resistance right 89. But if it gets above that, 88 to 92, oh yeah. And you can see to the left how fast this thing moves up. That's why. And so that's what happens. When you move up and down that fast, you can leave these volume gaps. So you just got to be on the right side of the trade or the investment. Now earnings, obviously we got Micron today after the bell, but you have Paychecks and you have Nike in the afternoon. That's the one you want to listen to because it's going to tell us all about China. It's one of their biggest customers. And so they've been struggling a little bit with that one. So we'll see if people are still buying the swish like they do here in this country. And tomorrow, all you got to worry about is Fed Chair Powell speaks at 9:30 in the morning. So expect volatility. I mean, what did it do last time? I can't remember if we ran up or ran down the last time he spoke. One day we ran down the first day, I believe it was. Ran up on the second day because he said the terms, hey, we could have a soft landing. And people went, oh my goodness. You know, and so again, all it does is create volatility. There's nothing else this man can say, you know, unless he comes out and shocks the world and he just says we're 100% doing a rate hike or we're not doing a rate hike. You know, there's nothing else he can say, and we know how he is. He bends over backwards for the market. So, you know, it's just going to be another him probably getting grilled about something or whatever. But he speaks tomorrow, and then he's going to speak in the afternoon, I believe, at 2:30 on Thursday. So just keep that in mind and stuff as we go through this. But again, good bounce back. You know, this is what we expect. You know, we'll see if we start heading up from here or not. You know, but this is normal, folks. This is what happens, right? Semis were doing what? They were leading the way. Got them a nice pullback. Getting a bounce now, and we'll see if they continue to head up. Again, Microsoft, watch out for that one. Apple, I mean, how long can that run continue? Put down in the comments. I mean, you know, because it's not some like high flyer, and yet it just continues to, it's the steady eddy, right? Just steady up in that channel. New 52, or new all-time high, excuse me, after new all-time high, right? And so, you know, anyway, I hope you got something out of it, guys. Hit that like and subscribe button. Really appreciate it, and I appreciate your feedback on yesterday's video. I tried to put more of those out for you and stuff. I enjoy those kind of videos as well. So anyway, I'll see you tomorrow.